you see the books behind me? Imagine those books in virtual reality. Imagine those books in an immersive world. So, the title of my speech is Immersive Banking, the post smartphone channel. And we will cover 22 slides in 15 minutes. This is me. I am top 10 thought leader and influencer on Fintech. I am co-author of 5 books about the future of banking. Here you can see my LinkedIn connection. And I am advising bankers internationally, CEOs, boards, top executives, as well as providing top quality training programs. I am in the jury of multiple awards programs. I have worked with bankers in over 60 countries globally, and there it is. There is Moldova. I have worked multiple times in Moldova. I have been in that amazing wine cave and everything. So it's a great opportunity. And AR and VR are for countries that are physically or in terms of population less large than China, less large than the United States, less large than India. This can extend us as large as we want. 5G, 6G, these technologies can move much more data. And these technologies actually open up the opportunity for virtual reality and augmented reality in high quality. So basically, you very well know that AR is an augmented reality, is a mixture of physical reality around us and a digital additional layer of information, while VR, virtual reality, is 100% entirely digital. MR, mixed reality, refers to software and hardware, which is capable of flipping between these different modes. 100 years down the road, some form of quantum teleportation is possible, but that is outside of the scope of our discussion now. There is a very strong trend pointing towards lack of screen being the new norm, the next disruptive step, the next number one channel coming. By the way, Clayton Christensen, the grandfather of disruptive innovation in business, pointed out that major cycles last approximately 15 to 20 years. And you can remember when on the 29th of June 2007, Steve Jobs announced iPhone, the first capable, viable, successful smartphone. So this cycle is probably nearing its end, and a new 15, 20-year cycle is opening. Screen size shrinking, cinema, TV, smaller desktops, smaller laptops, smaller tablets, smaller smartphones, smaller on the smartphone. We are already struggling. Smartwatch, impossibly small screen. What's the next step? The screen has to disappear. How can the screen disappear? In 2 different major ways. VR, substituting physical reality, the screen is substituting physical reality, or AR, where the screen is augmenting physical reality. Within immersive banking, within immersive technologies, there will be 3 major consecutive phases of sort of development. The first is primarily VR focused with these VR goggles like Vision Pro. And here, the operation system, such as Vision OS platform, will be the most important question in the center point. This phase will last from approximately between this year and 2029. From 2030, slowly, gradually, step by step, incrementally, little by little, marginally, we will enter into the second phase, which will be more centered around AR, augmented reality, smart glasses, a little bit more comfortable device. And then we will end up with the device gradually, step by step, melting into our body. And one intermediary but beautiful and important phase in this will be the smart contact lens, which is already almost part of our body. So let's start with phase one. VR payments going on for 10 years. Obviously, the right software, hardware has to be there. The users must be ready. But in China, for example, Alibaba has been running VR Pay under Ant Financial with a three-dimensional virtual shop version of Alibaba, where every virtual street is one product category, every building is one brand. You can navigate yourself inside these buildings with your VR goggles. You can focus on a product. You can blink, the detailed product information comes along with a little blue button which is about the price, and if you click, you don't click, you blink, you stare at that for at least 1.5 seconds, and you blink, you paid. That is VR payments. KBC, market leading retail bank in Belgium. KBC has been running a virtual reality branch with entry, with client training, with login to your account, with a gamified environment, with a teaching, learning wall about cyber security, and a certain level of gamification. You can gain sort of experience and learning points in this VR branch, and based on the number of your points, you get certain discounts when you use certain banking products. Before the COVID-19 pandemic hit. So when the pandemic hit, it was already working. Citibank traders, Manhattan, real estate prices, multiple screens, traders screens. So basically, Citibank started to replace physical traders screens like 16, 12 screens. Sometimes they fell on the people. There were some accidents with the VR solutions for its professional traders, and the professional traders love it. They can flip infinite number of screens. They can extend the screen to really large. They can flip between markets, asset classes, data sources, software, denomination, news sources, and this is the new norm. So banking employees will get into VR themselves more and more. VR Quant, retail brokerage, USA, for years has a simulation, VR simulation. You put on the Googles and you can go on a simulated roller coaster ride of a certain asset price history. You go on Microsoft stock price ride, and you realize, as an amateur retail trader, you are not amateur, but most of the people are, how volatile asset prices are, and what is nominal asset price volatility risk itself in terms of trading. So all of a sudden you gain a physical bodily feeling of risks. Many amateur investors think that stock prices should always go up. They will learn for a life that they are going up and down. But when you take a Bitcoin price history ride, you will get actually very, very dizzy. And then the AR glasses are coming, and then the smart contact lens. And actually, when it comes to smart contact lens, AR, augmented reality, the banks are already trying and trying. Obviously, they are deriving it back to the -1 prior incumbent major market leading channel, the smartphone. So Commonwealth Bank, Australia, augmented reality mortgage. You go around major cities in Australia, Sydney, and so on, and you point to a piece of residential real estate, a house, an apartment, and you fall in love with that. And based on geolocational analysis and real estate market analysis, it gives a price estimate and an immediate theoretic, tentative, approximate mortgage quote to you. And you can just point your Commonwealth Bank AR app to any piece of residential real estate in any major cities in Australia. You show your debit or credit card to the camera of your phone. It triggers past 3 transactions. It triggers current balance and so on. But what does Elon Musk think about nowadays? You know very well Neuralink. He thinks that AR and VR are just kindergarten things. He's thinking about the next cycle, which, as I mentioned you, a cyborg type of reality where the screen melts together with our body, and that is part of the concept of Neuralink. Okay, face-to-face banking, digital banking from bricks to clicks never happened because all channels remained with us. Then came multi-channel paradigm, omni-channel, coordinating every channel with every channel, too expensive, too large, too big, too complex. Instead of that, the new norm is opti-channel. So the new channels will come, the old ones remain with us, but we, even as a large market leading bank, must be selective. Okay, in immersive banking, many things will look different. For example, as a prior speaker very smartly mentioned, major central banks are working on CBDCs, digital form of cash, digital form of direct liability of central banks. But by the time these CBDCs will provide the last mile run from near cashless to patently entirely cashless societies, by that time, the primary running incumbent channel will probably and potentially be VR and AR, not necessarily only the smartphone. Therefore, when we develop CBDCs, let's think about it, or let's think about biometrics. Iris will become the new #1 biometric methodology for many, many, many reasons. Iris recognition is superior, safer, current technology, 1 in 10 million false positives, very stable across age, across different health issues, very, very secure because it's almost impossible to fraudulently duplicate. It's in fact a very complex thing. There are multiple secondary aspects, and then we are only talking about iris recognition, not even retina scanning, which is an even much more deep and advanced technology. It's synergetic, it's very easy and good and handy to combine. And iris recognition is the biometric methodology, identity basis, first factor of authentication of choice through VR and AR devices by basic logic. Sanitary in case of a pandemic, speedy, actually it goes, identification goes through very fast. That's why more and more airports use it. And sustainable because AI, artificial intelligence, is very well combined with it. Talking about artificial intelligence combined with AR and VR, the entire Vision OS platform programming and other virtual reality coding norms will increasingly be based on software 2.0 principle, the analogy of robots building robots, i.e., in this case, software writing software, because no one will program a patently entire three-dimensional multi-trillion data point system. This will be the first channel where the primary coding methodology will be software 2.0, AI writes the software. Going back to virtual reality, there will be so many other beautiful aspects, the open banking API aspects, the sounds, spatial audio is now becoming a new science, how to tune, how to have notification sounds, the degrees you are placing the virtual functionalities, the virtual UX, user experience, what is near, what is far the user. So we are entering a beautiful but brave new world. Thank you for your amazing attention.